Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And guys, we had Jerome in the house. And we know that the Fed has not lied to us not one time. A lot of people feel like they're not going to raise rates. But guys, we know they have to build this fourth industrial revolution. China's currency came up several times in this discussion. And this was a 3-hour meeting. That's the reason why I'm bringing this video a little late. But I wanted to make sure I brought you everything. We had Jerome out his own mouth say it's okay to have 2 reserve currencies. Guys, we know that's not true. We know the digital yuan is being set up as the world reserve currency, backed by that digital SDR, and the dollar is already gone. We printed all this money out of thin air. The dollar is already gone. But what do they have to do? They have to take us through this inflation process and then take us to deflation. And then also cyber attacks. Cyber attacks came up, and Jerome said the banks are well prepared. And we're seeing a lot of cyber attacks that are not even being talked about. And when it comes to inflation, we have all these educated politicians blaming supply chain. They know where this inflation came from. It came from them, Congress, which gives the Fed the permission to print all this money. And guys, when it comes to the Russia-Ukraine situation, we're going to pay the price. Commodities are already skying through the roof. They're going to sky some more. And Jerome stated he didn't even watch Biden's speech. Why is that, guys? Because we know the Fed, what? Cares not who makes your laws. If I'm controlling your money supply. And remember, the Crypto Teacher told you, because he knows. When it comes to the New World Order, it's all planned out. You have a wonderful day.
Ukraine war and other disagreements, that Russia and China are now moving to trade completely in their currency, no longer using the dollar. And Pakistan has flown in to meet with Russia. There's some talk that they may be part of it. What effect would that have on the U.S. economy if China and Russia no longer use the dollar in certain block trades around the world and with each other? What effect, if any, would it have on our economy?
Well, we do benefit from being the reserve currency for the main reserve currency for the world. And that really is because we have open capital accounts and the rule of law, and we have inflation over a long period of time under control so that the dollar preserves its value. And so our markets are the most liquid, and it's the place where people want to be. Over time, the question is if some want to move away from the dollar, what will be the effect on us? I don't think it's something you would feel right away. Over time, they would have to create an economic ecosystem whereby another currency becomes, a better currency for them to use. What we can do is we can make the dollar the most attractive currency by continuing to have the rule of law and open capital accounts and make it an attractive place for people to invest and to use in their businesses. There wouldn't be any short-term effect of that. Over time, though, it would. I suppose it would diminish our status as the reserve currency. It's also possible to have more than one large reserve currency, and there have been times when that was the case, and so it's not really clear. Financial markets and financial institutions. So we're providing technical support, but we're not the decision makers on those things. And honestly, these are decisions that are made at the level of the government, not at the level of the elected government, not at the level of the Fed.
And I know things are happening quickly and in real time here, but what actions has the Fed taken to date since the invasion of Ukraine?
Well, I'd say first of all, since late last year, we've been on very high alert. Mm-hmm. For cyber attacks. We haven't seen any notable incidents about that yet. We consult. We're making sure that the banks we regulate and supervise are also on high alert. We communicate with the reserve banks where there's a lot of expertise in these areas and other parts of the government. So that's one thing that we've done. We're, as I mentioned, we are in very close contact with the Treasury Department, as you would expect, between every central bank and every finance ministry around the world. But again, we're not the ones who design.
Rather than the world's despots, terrorists, and money launderers benefit from the emergence of cryptocurrency, including a central bank digital currency. Mr. Chairman, one of the headlines on my news feed this morning reads, "Russians turn to crypto amid increasing sanctions," as the chairwoman indicated. The subcommittee I chair and the full committee have done and will do hard work on this topic, but it is time for all of us to act. Mr. Chairman, I can't shake the image of 17th century bankers sitting around London, unable to imagine that their gold pieces and copper plates could be replaced by these worthless pieces of paper. Let's not be those guys. Let's lead and not follow.
I don't have any private information on the extent to which that is happening, but that is something you read about and hear about. And I just think it underscores the need really for congressional action on digital finance, including cryptocurrencies. We have this burgeoning industry which has many parts to it, and there isn't in place the kind of regulatory framework that needs to be there. It was probably no different with railroads or telephones or the internet, and ultimately what's needed is a framework, and in particular ways to prevent these unbacked cryptocurrencies from serving as a vehicle for terrorist finance and just general criminal behavior, tax avoidance and the like. So I guess that's what I would say there. I don't really know the extent to which it's happening, although you do hear that and read it in the paper.
The ability of the U.S. to hold rogue states like Russia accountable depends heavily on the SWIFT international payment system. In your view, how easily could China and Russia create an alternate messaging service that could seriously compete with SWIFT and seriously undermine the effectiveness of SWIFT sanctions?
I mean, and that's an interesting question to speculate about. I think in the near term, that's not something you can create overnight. I know that China does have their system. It's really a question for the longer term and not for the immediate. It's not something you could do quickly like that. But let me think about that.
Coin issuers have chosen to peg their stablecoins to the U.S. dollar, which to me represents a vote of confidence that reinforces rather than challenges the status of the dollar as the world's reserve currency. The U.S. has no CBDC of its own and is unlikely to have one in the years to come. Do you believe, as I do, that dollar stablecoins can play a role in outcompeting China when it comes to digital currencies?
I'll say it this way. I think there may well be a role for well-regulated stablecoins. I think there's the possibility over time, and this is not what we see right now, that they could be efficient and popular among consumers and things like that. I think in terms of helping us compete with China, I don't know, but possibly, yeah. I think
I'm assuming it's better to have stablecoins pegged to the dollar than to have stablecoins pegged to China's currency or the currency of a separate country.
I would agree with you that in a way that is consistent with the role of the dollar, and most of the big stable coins are, of course, dollar based.
Around companies need to lower their costs, not their wages, and that's how we're going to fight inflation. That sounds wonderful. How do you magically sort of lower your costs as a company? Is that something? It sort of implied that it's corporate greed that's leading to inflation. I've read your comments. I think they're spot on with respect to the supply-demand dynamics. But is there a way for companies to just sort of unilaterally lower their costs that you're aware of?
First time, I
know you didn't see the speech.
Never comment on the president's comments at any time, and I won't do that now. I think my experience in the business world very much was that businesses are constantly managing their costs. That's a lot of what businesses do. So it's an ongoing thing. But I didn't watch the speech, and I don't know the context, and I would never comment on anything the president says. So,
thank you. Shifting to my last question, there's been talk of whether cryptocurrencies represent a good vehicle for sanctions avoidance. I think you've rightly said that's maybe for the purview of Treasury. But generally speaking, a system that transactions occur on a public ledger that are auditable and reviewable by the entire world. Anybody in the world can go and check and monitor these things. And in a world where those same systems have transaction speed limits, essentially. Do you think in that world a public ledger is a good or sort of less good way to launder money or avoid sanctions?
I don't want to. I'm not an expert on sanctions, and so I'm reluctant to comment on that in the context of sanctions, just because it's not our field. I would say a public transaction. There's a balance you have to strike between privacy, which is very important, but also the ability of law enforcement and national security to track payments. And I think to the extent that cryptocurrencies are a means by which you can evade both law enforcement and national security concerns, then that's not something we should tolerate. Our objective, we're going to use our tools, we're going to raise our interest rates, and we're going to shrink our balance sheet over the course of this year. As I mentioned, during this critical phase of global events, we're going to do that with care, and we'll always move with care, but particularly now. And that's how it works. We remove accommodation, and the very high levels of demand that are to some extent a result of our accommodative policy. Those rates will go up. And take housing, for example. The housing market should cool off. It's very, very hot right now, and that should happen broadly in the economy over time. We talk about getting to neutral, which is a neutral rate, which would be somewhere between 2 and 2.5%. It may well be that we need to go higher than that. We just don't know, and we don't know what events will intervene in the meantime. But we haven't faced this challenge in a long time, but we all know the history, and we all know what we need to do. I also do think, and I think it's more likely than not, that we can achieve what we call a soft landing, and they're far more common in our history than is generally understood, and that would be what you described, which is get inflation back under control without a recession.
Yeah. Well, some of us in this room remember the 80s.
Sorry?
Yeah. Some of us in this room remember the 80s and what it was like.
When we make a decision about interest rates, or frankly even talk about a decision to raise interest rates, markets pick it up like that. Financial conditions have already tightened. We haven't actually lifted off from zero, but as of a week ago, the market was pricing in, literally already reflected in financial conditions to some extent, 6 or 7 rate increases. Now, it's less than that now, and we haven't made decisions to do that yet, but our decisions get into financial conditions very quickly. It does take time, of course, for that to affect economic activity, and that's where you get 3 months to longer than that. I think by the end of a year, much of the effect is generally thought to be in. So, but that time period has already started because monetary policy really works through expectations, and we're now expecting rate increases, and they've already happened in effect, and we have to ratify them, of course.
Yeah, we're seeing them. Finally, in the past year.
Let me word it this way. How sweeping do you foresee the ripple effects through the U.S. financial system? Is there an effect on us as those actions take place?
With big actions like this, there may well be unintended and unexpected effects, and hard to say what those might be. In the economic sphere, you're seeing, not directly to your question, but we're seeing concerns over palladium and neon and corn and wheat, shortages of those potentially, but so it would be difficult to say exactly what the effects could be over time. The United States, our financial institutions and our economy do not have large interactions with the Russian economy. It's a relatively small thing, and it's gotten smaller and smaller in recent years. So there wouldn't be, direct effects from these kind of things on the U.S. economy. It's hard to think what the second-order effects might be.
We could very well be on the verge of a hunger crisis all over this world. I want to share with you some research and the nation so we can understand what this Ukraine-Russia situation is causing. Today, Russia alone is producing more than 2/3 of the 20 million metric tons of fertilizer used to grow corn and wheat around the world. One country producing 66% of the fertilizer that is needed. And when you combine Ukraine and Russia, also, these are the two largest exporters of wheat, corn, and barley, producing a quarter of the world's wheat in these two countries, making this impact a crisis of soaring magnitude when you have this much and these two countries are warring each other. So I want to sound the alarm on this. I want to ask you this question. I want to ask you, Chairman Powell, the disruptions and rising prices from these commodities will destabilize global food markets and threaten our food stability and social stability. So my question to you, Mr. Chairman Powell, to what extent could these developments create a financial stability risk here at home and abroad? And what must we do? We can go without a lot of things in this world, but the one thing we cannot go without is food. And when you have this much power on our food security for the world in the hands of these two countries warring each other at this time, what can you do about it?
Sir, I think your point is very well taken, and I think it's shipping, it's corn, it's wheat, as you pointed out, it's fertilizer, and we see that getting into food prices and into the food supply just in these early days after the sanctions have been put in place and the war less than 2 weeks old now. The Fed doesn't really have the tools to address this. This is really a matter for Congress and the administration, I think. But you're right to call attention to it, and I do think that this is understood and understood that that help will be needed.
I'll note that CEOs from Kimberly-Clark to Tyson Foods have bragged to investors about their power to raise prices without facing competition. And last night, President Biden said, and I quote, "Lower your costs, not your wages." And my constituents were glad to hear that. So, Chairman, can you explain how raising interest rates will lower prices for diapers or chicken? Last time it was because my neighbors lost their jobs and couldn't find diapers or chicken. So is that the idea?
Well, the idea is that right now the federal funds rate is still set close to zero, and that is a very stimulative level. I think it's 8 basis points today. So that is not an appropriate level, we think, going forward. We think it's appropriate that we engage in a series of rate increases over the course of this year and also let our balance sheet shrink. And so what will happen then over time is demand will moderate as interest rates get into the economy over time. And these annual price increases in everything where prices are going up will moderate as well. That is how it has always worked with interest rates.
Talked about in 2 weeks, likely the 25 basis points increase. For my constituents, my consumers, what impact will we begin to see, will they begin to see with the small incremental rate hikes?
So it's a little bit like the rate hikes that took place in the first part of this century, not the rate hikes that took place after the global financial crisis were much slower. They were every other meeting, but the cycle before that, the rate hikes are consecutive meetings. So what you feel is these are fairly small rate increases, 1/4 percentage point every 7 weeks. And we haven't, by the way, we haven't made any decisions after this meeting. But the thought is that rates move up, our policy rate moves up, and with it, rates on mortgages, rates on car loans, rates on the loans that people take out to buy appliances and things like that. So companies, their borrowing costs go up, and you get to a point where you've raised a few times, and it's even still a gradual process, even though it's fast, as much as twice as fast as the last cycle. But still, people start to spend a little bit less, and the economy demand returns to a lower level. By this time, we hope that that the economy is going back to normal in terms of supply chains and the breakdown between goods and services spending and things like that. So we hope we're getting help on the inflation front from a bunch of things. In any case, we do have the responsibility to generate price stability, and we will use our tools to do that over time. Too.
Will we get back to the pre-pandemic levels
of price?
Yes, sir.
No, I would only expect that we could limit further price increases. We're not trying to drive prices back down. What we're trying to do is limit future prices. We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols? Who controls the underlying standards of the future of money will control the future of money.
The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team Save the Village. Part 2. King Joshua and Drama Team Save New York. From COVID-33. Part 3. King Joshua and Team goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.